So the new numbers that came out today show that the inflation rate's back to about what people would consider normal, just over 2%. And that could be said to be yet another positive sign, right, for the economy. Our next guest wrote in the Wall Street Journal today that either Vice President Harris or former President Trump will inherit a remarkable economy. Greg Ip is chief economics commentator at the Journal, joins us now. Explain remarkable. What's so remarkable about the U.S. versus other countries, right?
Exactly. I mean, the U.S. grew about 2.7% in the last 12 months. That's faster by roughly at least 1 or 2 percentage points than any other major advanced economy. Even if you look at China, for example, our big rival, they're growing faster, but they're struggling. Their growth rate is slowing down. Even more remarkable than the actual rate of growth, which is very healthy, is that it's non-inflationary growth. The inflation rate has come down in the last 12 months to a level roughly consistent with what the Fed wants it to be. And that's why they're cutting interest rates. And one of the reasons it's been a non-inflationary is that this growth has come not just from adding more people to the labor force, by making them more productive. Our productivity growth is higher. And that's a very positive sign for the future and whoever is president, because it means the economy can grow a little bit faster without having inflation, generate higher real wages, and even sustain larger debts.
You know, one of the interesting things you point out in your piece, a bunch of presidents come in recently and not had this luxury, but Trump, if he were to be elected, would have the same luxury twice. In other words, the economy was on the way up last time around for him.
That's right. I mean, presidents can't really control the timing of the business cycle, but as it happens, 3 of the last 4 presidents came into office right before, right after, or during a recession. As you say, Trump was the exception in 2017. When we look at the data all around us, we don't really see much sign that a recession is likely soon. Usually what brings about a recession is some kind of a financial crisis or an inflation problem that forces the Fed to hold interest rates really high. But interest rates are now coming down. It's not a guarantee that they'll come down that much, or that if you're like holding on for that super low mortgage rate, you're suddenly going to get it. But it does suggest that they're not about to shoot higher, which is usually bad news.
What about the disconnect? I mean, I posted your article on social media this morning because I read it right away. I said, this is interesting. And the pushback right away. What is this? You know, and it jives with the polling in your newspaper. We'll put it up from the Wall Street Journal. How would you rate the state of the U.S. economy? And they're not saying remarkable. 62% are saying not so good or poor, right? Greg is speechless by this. He's frozen in time, is what it happened. Now, it's one of those Zoom things that you would see if we put him on the screen instead of the full screen, that Greg just went like this and his face stood up. I said, what is it, something I said, Greg? Oh, man. There he is, Greg. Oh, wait, he's moving.
Can you hear me yet?
He's moving again. That's what somebody at the White House.
Has nothing you said. I just had to gather my thoughts.
That's what the White House hoped. They were hoping that would have happened to President Biden the other night on his Zoom call, but that didn't work, right? Yeah. Come on. Now, so what you were...
Don't we all have moments when there were things we said had been...
Right. Well, you wish the internet went out. So you're saying about... So the point we were making is that people... You're saying it's remarkable, and everyone said, no, I don't feel that way.
So there's a few things here. So I like to say that if there's a hurricane, don't just you might be mad that your basement flooded, but go talk to your neighbor who lost his roof. Okay, so it's all relative. The last 4 years have been rough for everybody. Everybody's had high inflation. Everybody's dealt with the pandemic. American incomes have not done well relative to what they expected, but they've done a lot better in the face of these global shocks than almost any country. So that's one thing. Another is that people are just really mad that the price of everything, whether it's houses, cars, or groceries, are 20 to 25% higher than they were 3 or 4 years ago. Now they're not going up that much. That's why we say the inflation rate's not that high any longer. But what they really want is they want them to go down to where they were 3 or 4 years ago. And that's just not going to happen.
And we don't want it to happen, by the way, right? Deflation is much worse than inflation. Yeah.
Right. The final thing, Connell, is that I just have a theory that people, when they say they're upset about the economy, they're actually upset about a lot of things that have nothing to do with the economy. They're upset with the state of the world in one way or another. We're a divided country. There's a lot of trouble overseas. And I think that sometimes what you see when people say they're upset about the economy, they're just really concerned about the future of the country.
I think you're probably right about that. That's a really good point. I'm glad you unfroze to make it. So we'll talk to you again soon, Greg. Thank you.
Okay,
Greg Ip there at the Wall Street Journal.
Thank you for watching, and make sure you go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.